I don't know of a time where people are more dumbfounded.
You want to own stocks when people are afraid of owning stocks.
I've seen times where people were way off sides and then it seems like overnight things just shifted. But right now people, including some of like the smartest people that I follow, seem completely dumbfounded.
The psychology is fear. Fear from geopolitical risk, fear about the tariffs, fear about Trump. The important thing is to be independent from all of that and just look at what reality is. And the reality is things are very constructive. These assets, they thrive on oxygen, fuel, and velocity. They need that to keep going. Like when the mojo goes out of the asset, it's hard to get going.
What's going on, everybody? Very special episode of the podcast today. We have my pal and very, very talented wealth manager, Ram Ahluwalia of Lumida Wealth. Ram, how you doing today?
I'm doing great, Pierre. Great to see you. Always a pleasure to be with you.
Likewise. So Ram, let's get right into it. When I look at this year, I think a lot of investors are probably pretty confused. I don't know if in my 5 years of being like, call it full-time investing, where like 8 hours a day I'm paying attention to the market, I don't know of a time where people are more dumbfounded. I've seen times where people were way off sides and then it seems like overnight things just shifted. But right now people, including some of like the smartest people that I follow, seem completely dumbfounded. What do you make of where we are right now, in Q4?
100% agree. This is a non-consensus hated rally where a lot of capital is offsides, wrong way positioned. My favorite kind of rally, by the way. Okay, so big picture, what matters for asset prices? Let's start with stocks. It's a massive asset class and it drives the economy, right? Earnings growth is going up. Last quarter was up double digit, 12% year over year.
Yep.
That's one. Two is we are seeing disinflation. It was a bit of a hiccup from some of these tariffs, but markets are looking past all of that. And Trump is tacoing every single time because midterms are coming next year. And now it's a Trump stock market. He said, hey, buy stocks at the bottom. His base owns stocks. He got kind of clever move, brilliant move on his part, actually, if you think about what he's doing here. And third, on policy and regulation, it's favorable and constructive. Deregulation is still coming. The bank earnings reported last week, they're good. Capital markets are good. Record revenues, earnings, investment banking, wealth management, bank lending is increasing. It's very clear to me that the fundamentals are strong. The fundamentals are actually Goldilocks, but the psychology is not that, which sets up a great opportunity. Okay, so the psychology is fear from geopolitical risk, fear about the tariffs, fear about Trump. There's a great study I saw, and it asked people, how do you feel the state of the economy? And if they identify as blue, they think we're about to go into a recession. If they identify as red, they think that, things are up and to the right. The important thing is to be independent from all of that and just look at what reality is. And the reality is things are very constructive.
That's what it seems like to me. Quick question before we dive deeper, because you brought up, kind of the Trump stock market, and this is not a political question at all, but if let's say the other candidate, Harris, had won the presidency. How different do markets look? I think a lot of people feel that in crypto, for example, Bitcoin would have been okay because the Bitcoin ETF was approved, under Biden. But being a crypto entrepreneur would have not been the best thing ever. Like if I was the CEO of Polymarket during a Kamala presidency, that probably wouldn't be the best. But what do you think markets would look like under Harris?
It's a great question. So it's first order, then second order. First order, what drives markets higher earnings? So Google, Meta, and Amazon would continue to earn and grow. Those stock prices would be higher, and that would carry the S&P with them. It's that second order. So you may not have seen animal spirits or this flurry of IPOs and all the digital assets rally. It would not have happened the way we've seen play out, right? So Trump was catalyst for that, and just like the animal spirits in general, there's a rally in small caps. Trump is talking down rates too, so I think market would still be up, but it would be the rally at the industry level would be a bit different.
Interesting. Great response, Ram. And then when you think about the things that are giving investors, doubt right now, you talked about how the fundamentals are so strong. Which do you think objectively matters the most? Is it the tariffs? Is it what's going on in the Middle East? Is it something else? Like what is the number one thing you think that is holding things back?
I don't think we're 2 points from all-time highs. What's holding us back? Right. Are at the back. We're there. We're all-time highs. Nothing's holding us back. In fact, what will happen is we will recognize we are in a Goldilocks setup probably sometime next year. And that will be when you want to be more cautious about investing. When people recognize we're actually in Goldilocks, that's when the prices will be much higher then. And so what will cause that? Look, we now have the prospect of peace in the Middle East, but legitimately that might actually be happening. Yeah. Iran is defanged. All this conflict is receding. Now Trump is refocusing on Russia, Ukraine. None of that actually matters for earnings. It really doesn't matter for earnings, right? But it matters for psychology. So Trump is now focusing on Russia, Ukraine. Let's say that gets resolved. And on China, he's doing the Great Taco and he's meeting with Xi Jinping in 2 weeks. And he likes to cut deals. So suppose you fast forward a year from now, those negative headlines go away. And look, take a look at the Wall Street Journal this morning. I had this post on Twitter. Every single headline was negative, but none of the headlines actually matter substantively. So imagine if the vibe just changes to the positive. People see the impact of AI in their lives. They see life extension from the GLP-1s. They see the benefit of oil at $56 a barrel. That means lower gas prices. They see the benefit of lower mortgage rates, which means they can refinance their debt. They see that their 401ks have gone up double-digit year over year. Then people wake up and say, wait a minute, things are actually really good, and now stock prices are higher. It's very hard for me to find the left tail risk. It's very hard. I'm always trying to find that. I'm trying to find what's the curveball that knocks me on the side of the head. I can't see it.
Yeah, and the reason I asked that question, I feel the same way as you. You obviously are much deeper into this by, miles and miles than I am. So I just want to kind of ask in a cautious way because I'm so just balls to the wall exposed to the market at this point. I'm like, do I have to take some risk off, going into Q4 here? Obviously, I want to get to Bitcoin. But speaking of the stock market, you talked about AI. What area of AI, and we'll pull up right here, this Wall Street Journal, headline.
Yeah, these are all the headlines from the Wall Street Journal this Monday morning. Now, mind you, markets are up this morning. Markets don't care about none of these things impact earnings. It's all fear.
Amazon services outage. That's done. That's already done.
It's done. That happened. It's behind us. It's not going to drive Amazon's earnings, right? San Francisco emerges from the shadow of a doom loop. Okay, old story. Runaway insurance co
on Latin America.
Like this is all just negative. It's just all negativity, right? And none of it matters. What matters is earnings growth, disinflation, favorable rate, policy, regulatory environment, reduced geopolitical risk. The government's still spending recklessly, which is actually bullish. So those are the big drivers. What are we missing here, right?
Yeah, the government spending recklessly, which is bullish because money supply is going up and that's going to inflate asset prices.
And consumer incomes and corporate incomes, yes.
And how much do you pay attention to that? Because I popped into Grok the other day and I said, just how much is money supply actually increasing? Looks like it's about $100 billion to $175 billion a month, right?
I look more at credit creation than money supply growth. They're related, of course, but banks are lending is the main takeaway. And the delinquencies, which people seem to fret about every quarter, they're fine. In some areas, they're decreasing. In some areas, they're going up, but it's renormalizing and still coming off a very low base, but it's fine. There are a handful of frauds like Tricolor, First Brand, and Cantor that blew up, and that caused everyone to seize up, and banks sold off. We then bought banks. It's all a nothing burger. It's not credit risk. It's isolated fraud risk. So overall, things are good.
It's not 2009 mortgage crisis.
It's definitely not 2009 mortgage crisis. Absolutely not. Now, it doesn't mean that you're not you shouldn't be leveraged, right? Because markets can shake people out of positions and all the rest. You should have exposure to multiple different themes. So when one zigs, the other zags. But overall, it's pretty constructive. It's so hard to find. Look at healthcare. You remember United Health when people were freaking out about that in May? It's up like 30% plus or minus from the lows in a couple of months. So, I think things are, there are rotations in the market, like Costco hasn't gone anywhere in 6 months, but the thing is valued at 48 times earnings. That's going to happen. Amazon, people wonder why that hasn't gone up. It's also more expensive than Meta and Google, and it doesn't grow as fast as NVIDIA. So a lot of what you're seeing in the market is actually fairly rational. And this is a good backdrop. You want to own stocks when people are afraid of owning stocks. And that's true for risk assets.
And right now, would you say that largely people are afraid of owning stocks?
Yeah, I think so. I think people are fearful. People are, again, if you are center right, you maybe don't have that view. There again, like the sentiment splits on political lines, which is something we haven't really seen in the modern era. So it is an interesting bifurcation. But there's a lot of people. I spoke with I have two friends that were visiting from Switzerland 2 weekends ago, and we were talking about a number of things. And they invest in the market. They're informed, and they were mostly in cash. They had one stock. And I said, why? They said, well, but look at the negative revisions to the non-farm payroll, this and that. And then these policies about Trump are going to this and that and the other thing. And so we're mostly in cash. I said, whoa, wow. Yeah. So they're indicative of a segment of people that are just offsides. And you can see it in long, short fund manager positioning, which is well below its highs. So like hedge funds, for example, which are a small pool of capital in the overall market. But these are just data points I'm giving you about this psychology that represent larger pools of capital that are just off sides. So they're in cash. Large, and like, why? There's no recession here. Like, you don't see a recession when earnings growth is just that. You don't have recessions when the S&P's just off all-time highs. That's not when recessions happen.
Right. And I feel like we had our recession in 2022, and historically you don't get another one 2 years later. I mean, I could be wrong about that for the past It's
every element of the GDP equation, right? Consumption plus investment spending plus government spending is going up. It's going up. That's just another way to look at it. So yeah, I do think people have a lot of fear and anxiety, and has to do with headlines and news. And the other thing is, I think what confuses people is like, and again, I'm being totally apolitical here. I'm just trying to call a spade as an analyst, not, and we evaluate each policy for what it is. And, Trump pivoted on the tariffs, which if he had not, things would be decidedly worse, but he did. He pivoted on the tariffs, and maybe that was his plan all along. Sure, it looks like it in retrospect. But overall though, it's, I think people are succumbing to like what I call like trolling from Trump. Third term and King's Day, like Trump knows how to push people's buttons, right? And he'll throw things out there that just upset people, and other people take those comments seriously, and then they go into a fear mode. They're like their amygdala. It's a part of the brain that is activated in response to the stimulus that and it's a fear gauge. The fear. We're now in extreme fear territory, by the way, if you look at the data. The VIX, which is the fear gauge, hit 29 last Friday. Hit 29. That's an extremely elevated measure of fear in the market. We're just 2 points from all-time highs. We're at VIX at 29. You usually see that when the market's down 8% or 10% in a correction. People are waiting for the shoe to drop, and then therefore the shoe doesn't drop, and the market will just grind up higher. That's what happens. And those people that are offsides, waiting for the shoe to drop, they get caught in a performance chase, and then they bid up these stocks higher. That's what's going to happen. And you're now the best part of market seasonality going now through year end. The holidays will come around. People will get over their seasonal affective disorder, and they will start to feel cheery again. And asset prices should rally in the back of that, plus earnings.
So I want to talk about individual sectors of the stock market and individual stocks. Just one last question on this. You talked about the political alignment factor coming into play here. For your friends, your Swiss friends or people that, are not falling on that center-right side, is the political comment that you made, is it basically summarized as people that are center-right, that are part of Trump's base, kind of know how he operates or trust how he operates? So they're like, I'm better off being in markets, than not. And the people on the other side of that take what he does seriously and think he's kind of a maniac, and that they're afraid that he's really going to do something tremendously dumb and screw everything up.
Yes, that's it. That's exactly it. The ones on the right, either, like you said it, either they know what his game plan is, or they don't know, but they trust the process. And a lot of people just trust it. They don't even know, fine, but they're like, all right, I voted for Trump, this is going to happen. And then on the left is over. It's not to say that like there aren't things that should be addressed, and yeah, sure, like the Trump meme token looks like great, right? But that doesn't relate to earnings growth. It doesn't relate to the state of the business cycle. And people are getting hung up on the wrong items. You got to focus on what matters for driving asset prices. The 10-year is now at sub 4%. Oil's at $56 a barrel. Mortgage refinance applications spiked last month. That puts more income take home at in people's wallets. AI spending is still going up, and the AI spending is productive because the companies that are investing in the AI are hitting record earnings. They're getting a return on their spend. CoreWeave's got a backlog of $50 billion and they have $3 billion in sales. So yeah, where people are focusing on the wrong things. They're not looking at the forest for the trees.
Yeah, the Trump token only affects you if you're a shitcoin trader. Literally.
Yeah, exactly.
So
Yeah. Well, yeah, exactly. People are just looking at the wrong elements and letting their politics unknowingly get in the way of seeing reality for what it is. The fundamentals are good.
makes sense. So you brought up AI, you brought up CoreWeave, some of these companies. I'm big on Iron and Cypher because I'm a Bitcoiner, and these are Bitcoin mining companies that are now, I don't know if it's a pivot or if it was just destiny, but it's, they're being positioned for AI data centers at this point, and there's been some huge deals. Nebius Mining was a huge deal. Google bought, I think, an 8% stake in them, I might be mixing it up. Either Google or Microsoft. Google and Microsoft have signed huge deals with Nebius Mining and with TeraWulf Mining. I believe Google with TeraWulf and Microsoft with Nebius, and all eyes are kind of looking at Iron and Cypher. Is this a sector that you pay attention to? Do you have exposure to any of these names?
Yeah, so I actually used to own Iron even a couple months ago. I don't own Iron now. I do own a private version of these companies. So here's my Iron call. We were long in March of this past year.
The time to be long.
Yeah. It didn't feel like it at the time, but certainly afterward, it's done very well. So I'm skeptical on the whole data center play that these guys are pivoting towards. Until I see an actual contract signed with a Google or a Meta, 25 megawatts of energy, and I think some of them can pull it off actually, including some of the names you mentioned. I like sticking to CoreWeave because they have the subcontracts and utility energy hookups, and they know how to stand up the data center technology, which is very complicated. And you also need the supply of GPUs, which CoreWeave is getting from NVIDIA. NVIDIA backed CoreWeave, and they want CoreWeave to be the next hyperscaler, right? Because it's a frenemy relationship. You have Microsoft, Amazon, Google, who are customers of NVIDIA, but they also don't like spending so much money in NVIDIA. So they invest in their own custom silicon, and they have their own cloud plays with their own in-house technology. Amazon has the Trainium chipset technology, and Google has their own custom silicon built with Broadcom. So they're hedging their bets, and NVIDIA doesn't like that. So CoreWeave's a pure play, and they're backing them. So you need the GPUs. CoreWeave's in line for the GPUs. They're going to get it, and they have the energy hookup. They have the backlog. So for me, I see it as a cleaner play with less risk. I think in private markets are good ideas. There's a company called Crusoe. I don't own it, but it's a $10 billion valuation now. They started as off-grid Bitcoin miners, and they took the excess natural gas that, let's say, an oil and gas company would have in Texas. They take that nat gas would otherwise be flared into the air. If you've ever seen Landman, it's this energy that just goes out in the universe. It's not harvested productively. They would go mine Bitcoin. So we found a company like this. We just invested in at a $40 million valuation. Lumida led the round, and they're doing off-grid Bitcoin mining. So they mine Bitcoin at a cost of $40,000 per Bitcoin. Yeah, and they extract oil too. So they're acquiring these stranded oil and gas wells that don't have a midstream pipeline because Trudeau underinvested in Canada Energy. So these wells trade cheap. You buy the well for 2x times free cash flow, and those wells are cheap because the nat gas isn't monetized. There's no pipeline. So they get in there, put a generator on it, and then mine Bitcoin. And that's why I'm getting my Bitcoin exposure now. It's off-market approach. It's an earlier version of Iron, and also Crusoe is how I look at it. So that's why I rotated out of my public markets position and focus on that private market opportunity.
You can do that. Your average retail investor can't do that. That's the name of the game with Bitcoin, is essentially just, monetizing wasted energy. And probably in the future, we might all have those Tesla batteries in our homes with solar panels on the roof, and whatever excess energy mines a tiny bit of Bitcoin. So instead of paying an electric bill, you're actually making money off of owning a house or something. Who knows how long that takes. That $10 billion company that you said, that's a pretty big market cap. I mean,
oh yeah. So they started as this, off-grid Bitcoin mining. I'll find you a news article. We'll share it on screen in a second.
Sure.
And this is an article from Bloomberg that I'm about to highlight here. And so the world needs more energy, right? Data centers are massive energy hogs. You look at utility stocks, and they're beating the S&P year over year, which is kind of wild. the world needs more energy. It says AI data center startup Crusoe in talks for 10 billion valuation. Again, so these guys started as off-grid Bitcoin miners, and they reposition because the energy you need to run Bitcoin, the same energy you need to power a data center. Data center needs at least 25 megawatts of power, and that's what they're doing. So they're powering OpenAI. So we said, gee, let's find a private. And you're right. Like, I think the SEC laws need to change to make these investments more accessible. We're looking into tokenizing these. That'll take time though, but we're looking to hire someone that leads on tokenization. We've been on the tokenization trend when it was unpopular. We were writing op-eds in the American Banker under the prior admin saying, defending decentralization and tokenization. Now the world has kind of caught up to us from a policy perspective.
Yeah.
So how do we tokenize these assets, put them on chain so people can access them? That's one of the things we're going to focus on. So more to come.
Awesome. I mean, I know you've been on that for a while. But $10 billion valuation, that's so high. I mean,
I agree. It's not for me. It's not for me.
Or like 60, right? Or $65 billion market cap, something like that.
Yeah, I think it's like the low 70s, high 60s. Yes.
Wow. I mean, because that CoreWeave is a bigger name, obviously, than that company.
Yeah. Well, I think the key underwrite there is the backlog is $50 billion. So as long as they execute on fulfilling against the backlog and convert that into revenue and earnings, I think they'll do well. Their gross margin is 60%. Their sales right now is around 3 billion plus. So if you fast forward 3 years, what will their sales be? Up how many X's, right? That's my very simple underwrite. This is a left curve underwrite. It's very, very simple underwrite. The other one is, NVIDIA's backing them, and NVIDIA's giving the GPUs which you need. And we were private investors in CoreWeave too before it went public. We invested in a $7 billion valuation.
Nice.
Yeah, that was a great one. And, obviously back then the IPO market wasn't open. That's when you get the best opportunities, by the way, when things feel gloomy and assets are cheap. And that was also an East Coast deal. It wasn't backed by Sequoia and A16Z. No one even heard about it. There's these ex-Ethereum miners that pivoted and found something, right? I think the data center story is very real, but I'm sticking to quality. I want to, like, if I could invest in AWS in a pure play, AWS is a fantastic business, but I can't. If you buy Amazon, you're also buying like Whole Foods, grocery store. It's a great business, but it's not. I just want to own AWS.
Yeah,
and CoreWeave gives me a pure play expression on that. It's not cheap, but it's not. I think the pipeline is there behind it, and I think NVIDIA is a kingmaker in the market.
Absolutely, and NVIDIA. I think people are expecting a partnership between NVIDIA and Iron. And I think a lot of people look at like Mike Alfred, for example, tweets about how he thinks that CoreWeave's market cap could potentially go down, or essentially just the gap between CoreWeave and Iron, that market cap gap.
I don't know. I don't know. I mean, it's hard for me to, like I said, I was an owner of Iron, as you know, so I'm not like an Iron hater. Yeah. My thesis on Iron was really simple: that the lowest cost energy producer to mine Bitcoin, which is a competitive advantage, and it was priced absurdly cheap.
Yes.
It was like 5 times forward PE.
For years.
But yeah. And so Bitcoin miners are, as you know, like it's all about timing. It's all about timing. Bitcoin mining is an extremely hard business because of the difficulty adjustment in Bitcoin. And you got to be a low cost energy producer to have an edge in the game. And that's why I saw an Iron. I don't think this is going to play out the way Mike thinks, because, CoreWeave has hyperscalers as customers, one, so they've proven they can deliver and they sign up more. Two, they have access to the energy. You need that. And you need energy not just for next year, but the next 3 years. So CoreWeave has that, right? They have an M&A deal that may be approved to acquire Core Scientific, for example. And they also rented out other energy slots with like DLR and Prologis. These are like service providers to a CoreWeave. They have like a utility hookups and a space, etc. And again, they're backed by NVIDIA, so they get the GPUs. Like, suppose you have 1 and 2, but you don't have the GPUs. Well, then what? Then you're in line. And NVIDIA, Jensen said he wished he owned more of CoreWeave. He's backing them, and he needs CoreWeave. CoreWeave's strategic to NVIDIA. I don't think you're going to see NVIDIA turn around and invest in the equity of another business. So he will sell those GPUs to others, sure, but maybe they go through Dell, right? So like, I don't know that Iron has a strategic advantage over CoreWeave. I think CoreWeave occupies kind of the high ground in this market after the hyperscalers.
We'll have to see how it plays out. The whole sector's hot. Very cool.
Yes.
You pointed out that it's a tough business. It was a tough hold, the stock. I first bought it in December 2023 for under $4. I bought Iron, and it was just, yeah, but it was an impossible hold. So I was in and out of it a couple of times between then and earlier this year. Even earlier this year, people don't remember now that it's $60 after being so low, but it got up to something like $16 or $17, something in the teens, and then pulled all the way back down to like $6 or $7 again this year. And it's like, geez, this is a brutal hold. And then after that is when it really took off. That's probably why you kind of made that comment where you said it didn't feel like it at the time when you were holding it and you were long in March. It
never does, by the way. Like when you're coming off the lows, the markets will try to shake you out, and it's all about fear, and you have to have the right underwrite. But yeah, no, I agree. It's a difficult hold. I think, I think now it's got momentum. And so it's a different kind of trader, a different kind of investor that's in it now. So, I think I'm looking for just better ways to get expression on Bitcoin. So it's a complex analysis you have to do here, right?
Yeah, I mean, Coinbase MicroStrategy, that was 2 years ago the best way to do it. It seems like Iron might, and these miners might be the best way now, especially if you're getting in the private market, right? So that's your trust.
Yeah, I mean, the good story around Iron is that it's got momentum. The crypto's all about momentum. It's like own the fastest horse. Kind of keep it simple. It's good. And if it breaks the key moving average, get out. That's the other rule. If you drops below the 21-day moving average, just get out.
Because you can buy back.
Say again?
Because you can buy back cheaper. If you want
when momentum breaks, just get out of the way and own it when it's working. When it doesn't work, just sell it, and it's okay. And you'll give up 8 points on the way out because of the price gap between the last, the high and then the 21-day moving average. But you'll also be protected on the downside. You'll take the gains. So that's not a bad way to approach momentum. I see Iron as momentum.
Well, we'll talk more about Bitcoin and crypto in a second. On the stock market side, you've had some real hits over the past, call it 18 months, 2 years. I'm sure longer than that too. But just since I've known you, Build-A-Bear was one of them. That one was pretty electric.
I mean, that was a great one, isn't it? Who the hell thought Build-A-Bear would crush it, right?
I mean, that one's electric, and it caught on, into the mainstream.
I was surprised too. I mean, these are now consensus, right? That's the power of now consensus.
Absolutely, and being able to find value, right? Which is something that not everybody can do. Yes. You told me that this year you've had some big hits, including front-running some of the bigger kind of retail names.
We got Better Mortgage. We got in that, and then Eric Jackson got into it.
Yep.
I had him on my podcast last Wednesday. Went up 25% today, by the way.
Yeah, I'm in it. I have a small position because of you and Eric.
Awesome. So yeah, we did very well on that. Yeah, look, we're having a good year. Last year we beat the S&P 500. We have audited returns to show that. Knock on wood, we're on pace to do it again this year. And we did that 3 years ago too. So far, so good. We're planning to launch an ETF next year to enable people to participate in our strategies. We run everything through separately managed accounts of Charles Schwab. We have an analyst team. We have AI. We're launching an AI app. We're 24 people. We have 7 developers. I built and sold a software company in my past life, and I love to build. We're passionate about what we do. That we've gotten to know each other. Like I'm just obsessed with investing in markets and building.
Yep.
So far so good. But we did well with the Warner Brothers, WBD, Norwegian Cruise Lines. Cut losers, invest in winners. Taiwan Semiconductor, we're buying at 15 times earnings, and Google we loaded up on. It got to 16 times earnings. Nonsense. Just nonsense. We've been buying Meta recently in the last few weeks. Again, that's not going to be like a 5x or 2x, but I'd be surprised if Meta's not up 20% in a year. I'd be surprised. It's got 35, 40% plus EPS growth, and you're buying at a PE of 25, right? PEG ratio is pretty good. So, United Health have been owning, we make mistakes too, but the key is we cut those losers and we own our winners, and we underwrite and re-underwrite, and just always ask us when we buy something, is it better than anything we already own or not? And so if you're constantly doing idea generation and research and testing against your existing holdings, the whole portfolio becomes fitter and stronger and more robust. I also believe in diversification, but not diversification for the sake of diversification. Like all those names are across different themes, but they all have big secular trends behind them or something that the market has misunderstood that's just mispriced. So we're looking for that. We like free cash flow too. We like free cash flow yield, but we like momentum. When we talk about momentum, Warner Brothers with their free cash flow story had like 17% free cash flow. It's bananas. We own some insurance stocks right now that have like 30% free cash flow. It's insane. And they're growing earnings. Like we're looking at that. Like right now, the themes that I think are often the most totally mispriced are banks and insurance companies. That's our largest thematic exposure right now is financials. They sold off last week. Progressive sold off a bunch. I bought Progressive last week, 3% position, which for me is material. The thing has like 12 times forward PE, and it's a leader in insurance. It used to be 20 times PE just like a year and a half ago. And basically the state of Florida told Progressive that they made so much money that they decredit their policyholders. So like, you guys are making so much money, you'd be recredit about it. That's a good thing. If you can make money as a business, it's a good thing, right?
Yeah.
So the regulators showed up, slapped them on the wrist. The stock dropped a lot. We analyzed it on the day it dropped. We said, okay, cool. All the bad news is priced in. The market cap dropped by more than the punitive measure. Now, maybe other regulators in different states act on it, but it's state by state. And, you got to look at New York, California, and Texas. Our assessment is that the worst is behind us. We might be wrong too. I don't know, but we think it's a good value here. And there are others too. Like Allstate has like a 4P of 7.7 times earnings. It's ridiculous. Like these are amazing businesses, like leading brands with moats. It's hard to see how this thing drops. And so I look at that, I say risk reward. Those things are a pretty interesting opportunity. And also the banks are all doing well. The investment banks are doing well. I think there's a lot to do in the banking sector, even internationally, like Santander, we are international, but we own quite a few banks and we're just excited about both. I think those two themes are cheap with earnings growth with good backdrops.
So huge bet on Progressive, huge. And then, so Better is falling into the financial theme there.
Yeah, Better fell under mortgage refinance.
Yep.
So we had a thesis that mortgage rates would come back down. It was at 7%. Ray Dalio in May was saying the end is near. Doomer, the 10 years is going to blow out. The U.S. is going to default on its debt. Never mind, U.S. can always print money and monetize its debt. We actually did this. It's called quantitative easing. And Trump wants to bring rates down, and Bessent's the Treasury Secretary, and they're influencing the Fed. Like, what world does that happen? Right. So we said, look, mortgage refinance will happen. So we started picking up. Then we said how to bet on it. So the ways to bet on it are like home builders, mortgage refinance companies, building material supply companies. We analyzed that and we said, of all of these, we said there's this company called Better Mortgage. This thing is also mispriced. So a few months ago, it had a 250 million, 300 million market cap, of which 100 million was cash. We're like, this makes no sense. And we looked at the company. We said they're actually not like bleeding money. They're just levered to mortgage refi. And then we reached out to the company. We talked to their investor relations. We did the deep work. We did the work we're supposed to do.
Yeah.
We said, maybe we're missing something. Let's talk to management. The same way last year I invested in ASPI, which is a uranium play. Now it's $1 billion business. We got in at 250 million market. But we sat down with the CEO and the IR. We're like, what are we missing? And maybe we're wrong. Now we can't do this to every single stock because there are too many positions. But for a small cap, like you really need, there's not much good analyst research and coverage. So we sat down. Then we said, yeah, like this is the mortgage refi story. It gives us the convexity we want. So when rates come down, they should do well. And now that it's done well, momentum catches. So now people that ordinarily would never even think twice about it, now they're in the market. Now they're owning this asset. And now it takes on a different dynamic.
How big can Better get?
I'm not a price target guy. Like I think it can do well. It kind of reminds me of like Dave 2 years ago. So Dave we bought at it had a PE of this is when I was hating on SoFi back in the day. SoFi has done well since then, but Dave has crushed SoFi, to be clear. My comp was well, why don't you own Dave? Dave's done well. I think it's similar. I think it's this hated, ignored stock that actually has a good story around it, and they're having good numbers, and you start to get community around it. Where Eric Jackson's involvement, I mean, he might have made it a cult stock.
He's working on it. He's still working on it, right?
Yeah. He I told him, I talked to him last week. I was like, can I send you a bottle of tequila? Thank you. He announced this thing and went up I don't know, a number of percentage points the day he said he was in it. So I think there's still opportunities like that in the market, by the way. There still are these mispriced businesses out there. They take time to find. But I don't know how high Better will go, but it has momentum. And, I think this is a trader market. It's a community cult trader market. Bitcoin wouldn't be what it is without Twitter. In the same way, MicroStrategy wouldn't be what it is without Twitter. And Open Door wouldn't have done what it's done without Twitter. And same for Robinhood. And same for Palantir. Better maybe is becoming a cult stock. And if that happens, what if more people start taking their mortgages out on Better because the shareholders become users of the product? Isn't that the main lesson from Robinhood? People said, yeah, they're trading out. They said, gee, let me buy the stock and vice versa, get a nice virtuous loop. What if that happens for Better Mortgage? And how many players on the market? There's like Rocket Mortgage, which is valued at 40 times plus PE, $45 billion market cap company, plus or minus. Better's at $1 billion. Who's got more to lose? I think Rocket does. And why can't Better take share into that? And they got the AI stack. So I think it's an interesting story. I think it's an interesting story for sure. There's always more to do. They just got to stay vigilant. I like consumer discretionary, and even like airlines. Oil's at $56 a barrel. We think the consumer is strong. Boomers are spending. Productivity's up. People are spending on travel and leisure. It's peak retirement age. Like the average, look at the workforce. Like the average age of the workforce at a level where you're getting peak retirement. What do? They spend on travel and leisure. They spend it on airlines. So I think that's pretty interesting too. So we own those and cruise lines. We own Norwegian Cruise Lines. I think in a year, those names could be up double-digit percentage too.
I wouldn't be surprised at all. I think Better is definitely interesting. I guess, not asking for a price prediction because I know you don't do those. But when I ask that question, I'm really thinking like, is this something that you think can have a big 3 years, a big 4 years, right?
Yes. I think it could be up potentially multiples in a few years. Yes.
Yeah.
So I do look at risk reward. That's how I look at it. Price targets are like this static point in time. Who knows? Like what I'm looking at is risk versus reward. I see more upside than downside. And I think the ratio of that is favorable.
You brought up a name that I'm in, Open Door. What would it take for you to buy into Open Door? What do you need to see?
Good question. So I like the mortgage refi thesis. I never studied it closely is the main thing. And part of it was just how I'm wired. It's very hard for me to follow someone else's idea, which is a blessing and a curse. It's a curse because I'll miss on someone else's idea. Because I don't know when they originated that and like where I am in the information flow of that. If I find an idea that no one's talking about, of which we've described several, I know we're like around zero. And so I'm not following or late to the idea. Okay. And so I know how that works. I know, okay, versus like if I were to like chase gold now, I know I'm late. Maybe it's a good thesis too. I just know I'm late. And I know an Open Door, I'm late. And so it's harder for us to underwrite because of that. It's just given our process, right? So I have a focus on the story. Like, I don't need to catch everything. I just need to stick to our process, research, originate good ideas, test against portfolio, allocate capital. They don't work, tax loss harvest, rotate, and then move on to and stick to what's working. And that has served us well.
Of course, you're operating at the highest level. It's a different ball game than someone that just can pull up their Robinhood and buy fractional shares of a stock if they want to, right? And just throw $200 at something, $1,000 at something. With Open Door, I have about 6,000 shares or 6,500 shares. I bought in initially because of momentum and because of the story, and it was an interesting ride over the first 2 weeks. The only reason I'm holding it at this point is because of the leadership. Because of the CEO Kaz from Shopify and Keith Raboy being the chairman of the board.
I like Keith a lot.
Yeah. Just because those.
Go ahead.
Oh no, just because of those two. And with Eric Jackson, when I interviewed Eric, I actually asked him directly. I said, "Do you matter anymore for Open Door?" And both of us kind of came to the conclusion, like, not really. I mean, obviously, if Eric said that he was dumping all of his Open Door tomorrow, it would make the price go down, obviously. But if you're just buying into this company to hold it for 3 or 4 years, at this point, it's in the hands of Keith and Kaz.
I will say I like where it is technically, and so I'll look at this, kind of quick technical analysis on it. But this is what I meant by the moving averages. So I call this a momentum stock. So you see right here when it approaches that 50-day moving average, this is a good entry point. So it behaved well right here. It's bouncing what it's supposed to bounce. Yep. So if this were to kind of sell below this, I would get out. Right? That's the risk reward on it. And Better, same thing. Better. We were accumulating here.
Look at that.
But yeah, look, that's insane. 30%, right? But here, there's a little bit of a fake out. So a lot of people probably went short here because they saw this breakdown. These guys got squeezed higher. So a lot of these are rallying also on a short squeeze. But briefly on Open, so I'll show you like how we use AI. This is our AI tool, our desktop version, where I typed in the ticker for Open. and it gives me an institutional grade bull bear case. And you can see it here. So it gives a summary, it gives a bull case, breaks it down, and then the bear case, and gives us key metrics. And it even goes through the earnings transcripts to call out key quotes. And what are the big drivers? The big drivers are, mortgage refinance, the state of the economy. It lays out who the competitors are, right? So this is what we do. This is how we stay on top of so many themes, is we're using AI technology so that when we have a first pass at a stock or a name, we have an informed view, and then our analysts can start to build on top of that.
I mean, this is phenomenal. I know Eric's a big AI guy too. Can we quickly zoom in on the competitors for this thing? And I'd just love to get your take. Who do you think is the most viable competitor for the company here? Because this is like a part of the kind of selling point.
Yeah, Zillow would be one. And I've looked at Zillow. I like Zillow's leadership position. The issue with Zillow is the share-based compensation is high, and the market might or might not matter for that. But these are the details that most retail investors will miss, is share-based compensation. You notice it's lagging, right?
Yeah.
So
WS?
Yeah, it's lagging, right? And it's down in the last 3 months, but sometimes there are amazing businesses out there, but management enriches themselves by issuing shares to themselves that are approved by the board. And you can find it if you go into the balance sheet and you look at the total shares outstanding and you look at whether it's increasing or not. And the issue I think with Zillow is that at least when I last looked at it, that I saw that there was more share-based compensation. So maybe they've improved it since then, but that adds to the flow. It's like the opposite of Bitcoin. They don't print more. Some stocks have buybacks, like the float's decreasing, right? I like that story. That's an interesting story too. But it's like Open might be successful. It's got so much attention that it might get a flywheel catch in the same way Robinhood did. I think you have an interesting story around it on technicals and the cult dynamic.
Oh, yeah. Don't get me wrong. I think it's a tall task. What they want to accomplish is no one's done it, right? No one's fully used tech to kind of revolutionize real estate. It's one of the last nuts to crack. We don't have it. We have Robinhood, right? Now you got Better Mortgage doing mortgages. There's all these examples of things that have cracked. The real estate one, the only thing that's been cracked by technology is the search. So instead of using a newspaper, you use Zillow, but then you just get handed off to an agent.
Yes. And look, I haven't studied Compass. Compass would be worth looking at too. Compass, Better, and OpenDoor were all venture-backed darling stocks in the private markets that they went took public. This is classic VCs dumping on retail. That's what it's so funny. VCs dumping on retail. They take them public. Yep. All the stocks got smashed.
Yep.
But it turns out, and SPAC, and some of these are actually good businesses.
Yep. And
then you recover, pay the good pieces. What hurt Zillow and OpenDoor and Better in the 21, but really Zillow and OpenDoor in this case, was that they were doing the internet home buying. And they had an algo to buy homes, and they would inventory them and sell them. And that was capital intensive, and they were not the informed buyer in the local market, right? The brokers know the market, and they were like the top bidder, all this stuff. And then they got stuck holding this inventory while rates were going up. Yeah. And so they got smoked as a result of that. So I don't know their business model now. I just don't. But so I know they both withdrew from that type of business model, which is good.
The business model has yet to be announced. That's kind of where you're at. Well, it hasn't been clear as day. I know we got an earnings call coming up, but it's not clear as day. Basically, the messaging from Kaz is we're a product company. We're a software company first and foremost. We're an AI company, right? We're going to be in office.
Yeah.
And they, there's talk of a marketplace. There's talk of not eliminating iBuying. There's talk of product features like being able to return a house if you're not happy with it in the first 7 days. And there's talk of making the home buying process 3 minutes long, similar to buying something on Amazon.
That's like Better's thesis, actually. I mean, if you can make home buying that fast and that easy. Now, Better's obviously on the mortgage side of it, which is so complicated. All the regulations. Now, businesses are sometimes either CapEx heavy or OpEx heavy. Now, Better is more OpEx heavy, and because mortgage origination requires someone to service the mortgage, take it through closing. They built out an AI tool to make it easier. Betsy's like the avatar spun up on an LLM. So they're essentially making it OpEx light, and mortgage broking doesn't require capital. So that's why I like it. It's a neat idea. And, I don't know, maybe they get bought. So I don't know the open. I got to study it more, and, who knows, right?
Yeah.
Again, like I try to we try to find our own ideas and then study it. And because I don't know where I am on the pendulum, there's always a FOMO pendulum, momentum pendulum. Yeah, I like to be early and comfortable and wait for long-term capital gains, like Build-A-Bear. Who the hell, like when no one's talking about Build-A-Bear, then I'm interested, or Norwegian Cruise Lines, or like the airline, or American Eagle with Sydney Sweeney now, right? Things like that. I like those kinds of ideas. We're early enough where it's got room to run that I can get long-term capital gains.
Sure. Not trying to sell you on open, just want to get some analysis. So I quickly, before we go into Bitcoin, do you have a hard stop at 2?
No, you can go.
Okay, cool. So we won't take that much longer, but I want to talk about Bitcoin and crypto. Last question. Do you guys sell options, like call options on your big positions ever? Is that something that you guys are doing?
No, we can't. I'd love to do that. It's mainly because, our active equity strategy is through Charles Schwab and separately managed accounts. And so you just can't do that at scale.
Yeah.
But when we launch an ETF, we'll have the ability to do that. We're talking to 2 white label providers now. Not only sell call options on positions that are in the gains where maybe you see a limited upside, but you don't want to sell it, pay tax, but also sell cash secured puts when the volatility is high to lower your basis. So those are things we want to be doing.
Yeah. I mean, for me, I'm just like, this is the best. I understand a lot. So I'd love to know your opinion on this. I see a lot of the TradFi people saying like, selling covered calls is stupid. It always underperforms just holding the stock. I hear that from time to time. But my thing is for these big positions, 6,600 shares on open, couple thousand shares of iron, couple thousand shares of MicroStrategy. Even if I do these in like MicroStrategy, right? That's like a $500,000 position. Even if I do the most conservative covered call, even like sell one today for Friday, ultra conservative, $440 strike on when it's $298 right now, right? Could it run to $450? Sure, it theoretically could. Do I think it's going to hit 450 by Friday? No, I don't. And I have 1,900 shares, so it's not a ton of money. It's not enough to get rich, but it's $300.
I think you have a good idea. I think you have a good idea. Obviously, timing matters.
Yeah,
you have to think about a couple different dynamics. What's the implied volatility, which is essentially what the price of the option is versus the realized volatility, and you have to have a view on the name and all this, but. Yeah, I think you can. I think it's a very sensible strategy, actually.
Yeah, especially for when things go south. I mean, honestly, I wish I had the practice last bear market. It would have totally reframed the whole way I thought about things.
Yes. Most assets like Bitcoin, and I call them animal spirit assets. They right tail skew, which means on any given day, on average, it's actually declining. It's really interesting.
Yeah, Bitcoin goes down almost every day.
Right. It's just that on the days that it goes up a lot. Yeah. Right. So, if you're aware of that and you can, say like, we know the seasonality is weak around August and September, maybe you're selling calls in July. And then maybe around now you're not doing that. Or maybe, it depends on your time frame and your approach and all the rest. Like 1 week is different than 3 months, obviously. But I think that's very sensible because the options are expensive. Like if you sell things that are expensive. Now, what you should never do is sell naked calls. That's how you get destroyed.
Yeah.
Don't sell naked. I know you know that. Your audience, though, don't sell naked calls. That's how you get destroyed.
Yeah, I'm not a gambler. A lot of people on crypto Twitter and a lot of people that, follow the content, that I make and that my team makes do take more of a gambling side. So I completely co-sign what Ram just said. And on the subject of what you just were talking about, for the better part of this year, I was selling 30 to 40 DTE calls on the MicroStrategy position and getting great premium. I looked today. It's about $4,000 of premium if I was to sell a 40-day call option at 10 delta for MicroStrategy right now. But I'm not doing that because look, if Ben Cohen's right, and if and this is a good segue into what we're going to talk about. If Q4 is going to be big and Santa rally and we top in Q4 this year, then I actually don't want to be offside. So I'm selling these really conservative weekly call options on MicroStrategy. So this kind of leads me into my next question. Do you still believe in the Bitcoin 4-year cycle, or did you ever believe in it?
That's a great question. So these are the things I think about every day. So I'm less about, do I believe in this or that? It's not about what I believe in, right? Like it's more around, how do I approach the current setup? And so I've got to ask myself, what do other people believe and how will they respond to it? Overall, I believe that enough OGs believe the 4-year cycle that have size, and they're selling at 125K. We see that. We see that in the charts. By the way, not only do we see it, I've talked to these guys, so I know they're doing it, which is cool about my business. I talk to like our clients and like, what are you doing? They tell me, like, okay, so that's why that chart, I see it. You see the real world actor and the chart, and you can see what's going on. I think there are people like maybe the Fred Krugers of the world, maybe the Michael Terrapins that will probably sell in the fourth quarter. And I think other assets are competing for attention. Bitcoin is an attention asset. I mentioned earlier, Bitcoin wouldn't be what it is without Twitter, without social media. It's internet money. It goes along with internet communications. So quantum stocks have taken some of the attention. I'm not a big fan of quantum stocks, to be clear, where we are now. Gold has taken some of the attention. And you have other assets like what you and I are talking about, like Open is taking some attention and better. Look at yourself. You own MicroStrategy, you own Bitcoin, now you own Open. So others are doing the same thing because people, when you're in an attention market, they want to own the faster moving horse. And that I think could be an issue. So I think I like Ethereum and Solana here. I think Tom Lee will introduce Ethereum to a wider audience of people that haven't heard of it. That could be a bid. And there's a stablecoin story around that. We wrote about that Ethereum stablecoin story before Tom Lee got on board, by the way, on Twitter back in June. It was like non-consensus. But the stablecoins are going to Ethereum. It's like TradFi chain. People hate to say it that way, but it's TradFi chain. Isn't Ethereum TradFi chain? It's not a bad thing.
Well, now that Tom Lee's like the best spokesperson, better than Vitalik.
Yes.
Perfect person for it.
Vitalik is not a good storyteller like Kyle Samani or Toli or Raj from the Solana ecosystem. They know how to talk internet capital markets, and you can get things done in the Solana ecosystem, like the leadership, you know how to triangulate. Like Vitalik is so abstract. But yeah, Tom Lee is like the new Vitalik.
Better.
And people will just follow Tom. That's what's going to happen. And there are more than glimmers of truth to the Ethereum kind of story. And so now, it's an attention market. And it's outperforming Bitcoin the last couple of months. So that's enough. That's my view, right? It's kind of a very simple left curve underwrite here.
Sure. Do you think the cycle continues into next year? Or do you think that we topped already, or we topped this year?
I think so. Bitcoin is a very hard call. I'm of the view, I kind of shared my view on it now, but I'm a big believer in like assess and reassess and reassess. You get new data coming in, like let's see what that new data says and how, if other assets compete for attention, I think it'll be hard. Like if NVIDIA and these AI stocks run in a way that actually competes with Bitcoin, right? So I think Ethereum and other digital assets can still do well, especially if there's pressure on cutting rates. Like if they cut short rates and long rates drop, things could get nutty next year. We'll have to see, right? We'll have to see. But if short rates cut lower and you're adding money to the system, and now there's talk about stopping quantitative tightening and you get some QE, I don't think you'll actually get I don't think you'll see the Treasury buy mortgage bonds. I don't think that'll happen, or Treasuries. But you could see how there's this right tail setup that could happen there around digital assets.
So yeah, exactly. And so why does the 4-year Bitcoin cycle have to exist? Is it just this, psychology? Because I'm like, why do we have to just crash? Last time we started a historical rate hike cycle and we got the SBF, blow up, literally a top 3 exchange that was decorated and recognized as, one of the greatest organizations in the industry, turned out to be a Bernie Madoff level fraud. So I understand what happened last time. Right. And then 2017, it was just still so immature. The asset, it was a gamble, a retail pump. We have an ETF now.
Yeah, like it's a legitimate question. And like no one really knows. I think when it comes to these attention assets, it's about flows. So I do believe that there will be OG whales and others that approach Bitcoin like religion, and they'll say, I'm supposed to sell now. I think that'll happen. Yeah. The question is, how long does that take to get priced in? How long does it take for their selling to be absorbed by the market? And when they do the selling, does it change the momentum around Bitcoin? Because these assets, they're like, they thrive on oxygen, fuel, and velocity. They need that to keep going. Like when the mojo goes out of the asset, it's hard to get going. It's like you poke it with a stick and you're like, come on, go. Like, where's it going? And then people just move on to the next theme, right?
Yeah, I mean, fair. Yeah, I'm dumbfounded also because I'm like, I don't understand why this thing needs to crash at this point. So that kind of leads me to my last question here about Bitcoin specifically and crypto. When we inevitably at some point get a bear market, because I'm not, delusional. It will be a bear market at some point. Whether that just comes right on schedule in early 2026 or another time, we'll have to find out. Do you think that we see a similar, 50% plus, 60% plus crash, which actually would be less of a crash than we've seen in previous bear markets?
Yeah, no, I think that'll happen. I think you're going to see less volatility, less drawdown risk versus prior markets. I think it's crossed the chasm. You got the largest asset manager in the world who has launched a Bitcoin ETF, and the Bitcoin ETF is the most successful product they ever launched. Yeah. Like, this is here to stay. We have
successful product ever, right?
Yes, it's the best product they've ever launched. That's a one-way door. So let me share the screen with you. This is open to the public, by the way. Our devs at Lumida created a crypto page. You can get it at lumida-ai.com/crypto. So it's saying it likes Solana now with high conviction. By the way, this is entertainment only. We're still iterating on these things, but you can see the fear gauge index is very low. You can see how it's technically set up here. But pretty neat stuff though, right? So I'm trying to drive more information to the AI and the LLMs and teach it how we think. And you can see it gives you like a technical readout. It said Sol is in a consistent uptrend with higher highs and higher lows since March, I think. And it goes through the economic calendar, and then it goes through Twitter to find out what people are saying and tags bullish as green, red as bearish. But I like to look at this to get an initial view. So on Bitcoin, this is what it's saying for Bitcoin. I would actually be more bullish just immediately where we stand here, looking out like a 1 month basis. You see like this Bitcoin options, this blue line.
Mm-hmm.
Like, I like to own Bitcoin when this is near the lows and turning up, which is what it's doing now.
Mm-hmm.
Right? And you got a nice little wick here, that red bar right on the 200-day moving average. This is a good technical setup. And when you're approaching digital assets, you have to use more technicals and fundamentals. This is, I think, something that TradFi people don't get. They get, first of all, you don't learn technical analysis like in traditional investing.
Right.
But it matters. This is an attention asset. Does it have momentum or not? And, looking at the positioning matters. So I think in some ways it's easier, actually, because there are fewer things to focus on, right? But this looks to me like a pretty interesting opportunity, obviously with these massive liquidations not too long ago. But a lot of people have cash. Like, those derivatives require cash. So if someone's gaining cash when someone's getting liquidated.
Got to factor all that in. Look, Ram, always a pleasure to have you on, man. People should follow you on Twitter. Your handle, if I'm not mistaken, is just your name, Ram Ahluwalia, right?
Yeah, it's at Ram Ahluwalia, RAMAHLUWALIA. Or you can follow us at Lumida, LUMIDA, Lumida Wealth. We have a Twitter handle there. We have a newsletter we publish every Sunday. We talk about all things macro. So thank you, Pio. Really appreciate it. Always a pleasure. Until next time.
Of course. And you got some retail products coming out in the next year or two.
We have AI that'll be in the App Store within 30 days. We have a wait list at lumida-ai.com. We have an ETF we'll be launching in Q1 of next year. And we're also going to tokenize Lumida stock. I know you and I have talked about that. It's coming together. We'll have to have a chat offline, when you got time. But, we want to lead on the things we're talking about, eat our own cooking. And, we're doing more pre-IPO deals. We're trying to figure out how to tokenize that. Maybe we put that on chain. We're doing cool stuff. We're having fun, working hard, building, having fun. And what else can you ask for? So
you guys are absolutely crushing it. Well, make sure you follow Ram on Twitter. Thanks for listening, everybody. Catch you guys next time.
Thank you.